Hello, my dear friends. Welcome to Latest Wealth. Mind, Money and Market. I'm Kailas here. I'm an education psychologist, entrepreneur and wealth coach. In earlier episode, we discussed 10 steps of successful investing. In that we discuss 4 steps. The remaining steps now we are going to discuss. If you have not watched that episode, don't forget to watch. After this also you can watch and let us go into next level. My dear friends, in earlier episode we'll close with risk tolerance. Let me remind you once again the risk tolerance. Suppose you can carry 50 kgs. If I put 60 kgs you can carry, 70 you can carry. If I put 100 kgs, what will happen? You will collapse. Same the way you have to find out your risk tolerance. Now let us go to next level. The next is very important and don't miss, very important. Find out your investing style. It's a pure about your psychology. Why I am so much particular about this one is, my friends, it differs from person to person. Please don't copy anybody as it is. If you want, you can follow, but don't copy. There is a difference between following and copying. For example, some person follows Gandhi, means he can having a vegetarian food and he can go exactly can follow. But copying means he will be dressing like a Mahatma Gandhi. By just dressing like a Mahatma Gandhi, you cannot become Mahatma Gandhi. Correct na? Same the way, don't copy others, just follow it. Don't follow blindly. You choose your investment style. Let me give some more light on this one. However, we are going to create one more video on this one. How to choose your right, perfect investment style. My dear friends, investment we can broadly divide into 2 types of investment. It is just like a farming. Because India is an agricultural country, so that you can understand well. See, you might have seen 2 types of farmers. One type of farmers, what they do? For example, they grow some vegetable plants or rose plants or flowers. What will happen? Or paddy fields. Like 3 or 4 months, they'll grow it. Once the crop has come, what they'll do? They cut the crop. Yes, then they sell the crop. Immediately they plant some other crop. After 3 or 4 months, once again they cut. This is one type. You might have seen some other type of farmers. They are like, they grow trees like a mango garden, coconut garden. So first 2-3 years they don't have any returns. After 2 or 3 years, they will keep on getting the returns from that trees. Both are correct. Nothing is right or nothing is wrong. You decide which type of returns you want. Same the way in the stock market also, there are some people called traders. Traders go with the short term. What their idea is, they'll purchase today, they purchase after 1 week or after 1 month, after 3 months or same day also. That's called intraday, but I recommend never do intraday trading initially. Most of the people caught up. Word of caution I am saying, never do the intraday trading initially. Yes. Second is investors. Investors, what they do is, they find out which company is very useful and which is having a big growth. They select some stocks and keep in the portfolio for 2 to 3 years. Then afterwards they start getting bonus shares, split shares and dividends, and they start accumulating the stocks, and one fine day they'll become rich. For example, Warren Buffett, world's richest person in the world, who made fortunes by stock market only. If you come to India also, a lot of people like Rakesh Jhunjhunwala, almost more than 10,000 crores worth he got from only stock market, like a Vijay Kedia, Ramdev Agarwal. Like this, a lot of people are there. You may be one of them. So decide. So my friends, when I am saying find out your exactly investment style which suits you, why I am saying is, most of the people copy others and they'll fail in the market. Why I am saying is, especially when you are doing the investment, never compare yourself with any person in the world. Why is, always remember you are unique in the world. However, as a psychologist, let me tell you something. In the world, 4 things will never match. 1, no 2 people fingerprints will ever match. If you want, you can go and check it out. Entire world, two people fingerprints will never match. Second is, two people handwriting will never match. That's why you might have seen in banks and all, they'll ask you signature. Even somebody does the forgery, if you go into scientific study, you can find out. That means it is clear. Fingerprints will never match, handwriting will never match. Same the way, no two people voice will ever match. Same the way, no two people personality will ever match in the world. So please remember, nobody in the world is exactly like you. You are unique. That's why I say, when you are doing the investment also, career also, you find out which is suitable for you. When it is suitable, then what will happen? You start accumulating the wealth. Please never compare. And let me tell you once again, my friends, have one crystal clear plan based on your needs and wants. Stick to that plan. Unfortunately, most of the people, what they do is they keep on scrambling that plan, keep on changing the plan, because they keep on changing the priorities of financial needs based on other people's success and based on other people's wish. If some other family members are demanding, your relatives are demanding, your neighbors are demanding, don't go with the competition with that people. You are unique. Prepare one that is very simple and easy to succeed. Unfortunately, most of the people, they don't stick to their plan. Yes. Next, let us go to next point. The sixth is, find out the costs. What is the cost? You know, I have seen a lot of people directly they jump into investment world. It is just like an ocean without any safeguards. How I will tell you. Just some people I have seen, they take the stocks and they'll purchase, but finally they come to know that they are into losses. How it is possible? Because they are purchased for lower cost, they sell for profit only. But sometimes what will happen, brokerage costs, they don't add up, and tax. So before investing, go through all the costs, whatever the costs are involved. Same thing in the business also, you have to, micro costs also you have to calculate. That's what I met a lot of successful people. They are very much particular about numbers. If you are not that much smart in calculations in the mind, write down in the paper. Or if you are good in computer operation, go to Excel sheet, write down and take time and check it out. Some websites, suppose you are going to open a Demat account, which company is charging more, which company is charging less, what are the transaction charges. And same thing, the tax system also changes from country to country. For example, in India, long time back there was capital gains tax. In between they removed the capital gain tax. Once again they have introduced capital gains tax. Like sometime wealth tax will be there. You check it out. So that you have, I don't know you are from which country. You have to calculate all the costs. Next step is, the seventh step, find advisor, mentor or coach. Yes, my friends, my sincere humble request is, find out one person who has already achieved something in that investment matters, or who are experienced coaches. You know, Tiger Woods said long time back, the difference between amateur and professionals is, amateurs they don't have coaches and professionals they have coaches. If you see, in India also cricket, a lot of people will be playing cricket. Who has become superstars in the cricket? Who are having coaches. And if you see, a lot of people are playing the badminton. Why everybody has not become successful? The people who are having coaches, they are having a probability of getting success. So find out, and please, word of caution. Unfortunately, most of the thing, what we do is, we'll start asking the stock market tips from Saloon, Dhobi, Auto Fellow. Please remember, most of the people, what they do is, they go to the wrong person for right advice. Then you will be in the soup. Let me give one example. Suppose if you want to become a doctor, whom you have to ask? You have to go and ask a doctor who has already completed MBBS or post-graduation. He will guide you how to become a doctor. If you want to become an IAS officer, whom you have to ask? Go and ask one collector, because he already has achieved. Same the way. If you go and ask one auto driver how to become a doctor, do you think he is going to guide? But unfortunately, what we are doing in investment, I have seen a lot of people, when they want to start their own business, they go and ask their friends and relatives and who are in the employment quadrant. They were never done any business in the life. They go and ask their family members who is not having any experience in the business. What ideas you will get? You follow their ideas, that's why you fail. Then they start saying business is risky. Same the way they start saying investment is risky. My dear friends, please remember, once again I am saying repeatedly, investment is not risky, investor is risky. So have a coach. Nowadays you are a very lucky generation. If you go to a website, you can have a lot of data, find out one coach. Or attend some seminars, attend some training classes. Anywhere, attend some stock market training classes, 1 or 2 classes, practice that one. Then you will have more confidence. Then you will come to know how to reduce the losses in stock market. Now let us go to next step. 8th point is, once you choose your guide, mentor or coach, now the next step comes is choose investment wisely which suits you. Please don't get confused between this 8th point and the 5th point. 5th point deals with your style of investment. This 8th point is which investment suits you. Whatever they may be investment, it may be gold, real estate, business or stock market, bonds, mutual funds, you decide. Because please remember, but collect the data. Always remember in the life, data from others, decision from your side. That's all. Then you will have confidence, you will take the action. Yes, take which type of investment suits you properly. And especially when you are into stock market, initially don't invest in the sector which you don't have any idea. Like the world's best investor, Warren Buffett said, he has invested in Coca-Cola, he has invested in Gillette, like this. When people ask him, why you are not invested in technology stocks? He said very clearly, I don't know anything about technology. Even I don't know how to use mobile phone. That's why I am not invested in technology stock. Such a big investor, he said honestly. So don't invest in the sector which you don't have any idea. Now let us go to next. Before going to next, let me tell you, my friends, how is you choose your investment. If you are a bachelor, you can choose some type of investment. If you are a married person, it differs. If you are from one particular part of the country, investment style may differs, right? If you are in a village, there is no use of investing an entire thing in a real estate, yes? If you are in a big city, then strategy will start changing, yes? Select the investment which suits you properly. My dear friends, 9th point is practice emotional balance. You may be wondering, sir, are you doing any meditation classes? No, my friend, I am not doing any meditation classes or yoga classes, but the most important thing in the stock market or investment is emotional balance. Most of the people, they lose money in the market is they don't want to lose the money. That's why they lose the money. Let me tell you once again, most of the people, why they fail in the life is they don't want to fail. That's why they fail. Whereas the winner attitude is, in spite of failing for 4 or 5 times, the ultimate goal is to win the game. Same thing, investment is also like a game. Learn how to be emotionally balanced. For that, how to maintain emotional balance, one more episode we are going to create. However, in this, I will give 1 or 2 tips how to maintain, because most of the people, they don't want to lose, that's why they lose. How to maintain emotional balance when you are losing? Any investment, there are chances. Like, so for example, if you see in the cricket, Sachin Tendulkar made a lot of centuries. You know the same Sachin Tendulkar who was duck out in more than 100 matches. But since he has duck out, he has not give up, na? Same the way. Let me give some of the tips how to maintain emotional balance. What you do is, whenever you are getting some free time, go and do some charity works. Start giving donations to some charities. And keep on giving some extra money to the poor people. What will happen is, mind will say, however, I am giving the money, this is like you are losing. When you lose anything in the investments, then mind will say, however I have given for charity, okay, these are also things like a charity. Then emotionally you will be strong. And my friends, emotion, why I am saying is that especially in the stock market, greed and fear are the factors which are controlling the investors, not the number. Most of the people, when the stock prices keep on growing, they think they'll have more greed. Greed will occupy them and greed will be dominating force. They'll keep on thinking, oh, stock price will go up. One fine day, all of a sudden stock price will go. Whereas the seasoned investors, I observed, when they have reached their goal, immediately they sell the stocks and come out and they'll start investing in some other investment portfolios. Same the way, fear also. When the stock market is in a low, most of the people get scared and they go away. Whereas the seasoned investors, when all the people are getting fear, they started investing. So maintain emotional balance. That's the most important thing. Next, let us come to next point. The best quality I learned from most of the successful investors. I am very lucky that almost I met more than 100 successful investors in my life. The 10th quality and the 10th, the most important is review, relearn. Review and relearn means on regular basis keep on review your investments, because there are different cycles of business like a seasons in the climate. Sometimes winter, sometimes monsoon, sometimes hot. Same the way in the business cycles will be keep on going. Sometimes some investment will go rise, some investment will come down. After some time, this type of investment will come down, this type of investment will come up. This you will learn by the practice and experience. So frequently you have to keep on revising your investment. Let me tell you mantra of success. Learn, unlearn and relearn. Learn, you will be learning a lot of things. After some time you have to unlearn also. Then relearn. That's the funda I have learned from most of the successful people, and hope this episode was very, very useful for you. My friends, if you feel it is very useful, don't keep this knowledge with you. Share with your family members, educate them and insist them to watch. Especially if you are a parent, tell your children to insist them to watch. If you want, give some incentives to watch this one, because always they'll be watching movies and cricket and all. Tell them to watch. If you want, give some incentives. If you watch, I'll give 100 rupees. When they watch, they will get wonderful knowledge. And thank you very much. Till we meet again. Enjoy every bit of life. Kailash is logging off. Thank you very much.